evening, everyone. Welcome to Let's Learn Futures webinar series. This webinar series is brought to you by Bursa Malaysia and managed by our company, Excellent. Now, our topic for today is mastering fundamental analysis for futures trading. Many of you, maybe you are more familiar with technical analysis, for example, chart patterns, technical indicators, etc. But fundamental analysis is another topic that we need to at least understand when it comes to trading. So that's the reason why we are having this topic, mastering fundamental analysis for futures trading. Now, our session for today, we are going to separate into two different sessions. The first 60 minutes will be presented by CY Saw Chuan Yen, and the final 30 minutes will be our Q&A session. My name is Ting Ting. I'm your moderator for this session. Now, as usual, before I start, can you please make sure that you can hear my voice, you can see my slides. If you can hear my voice, you can see my slides, can you please just type in the chat box 1? I repeat, if you can hear my voice, you can see my slides, can you please just type in the chat box 1? Very good, or else there's an emoticon, you can press on the emoticon itself. Very good. I can see many of you, you can hear my voice, you can see my slides. Now, if you can't, basically, you just need to follow these steps. Nothing much that we can help you. Now, subsequently, please make sure that you off your video to have a better learning environment. I can see some of you, your emoticon is still up. So, very good. You just need to off your video so that because video itself will take up a lot of bandwidth. So, for your better learning environment, please be advised that you should off your video. Now, along the way, you do not need to wait until the end of the session. Along the way, if you have any question, you can start to type in the Q&A box. Please try to avoid typing in the chat box because let's say, for example, some of them are having some chat or even sometimes our speaker is going to ask any question, then you're going to see that the answer is going to flood the chat box. So please type in your question in the Q&A box and send it to all co-hosts. You can type in any languages in, let's say, for example, Malay, English, or Mandarin. I'll try to translate it for CY to answer at a later stage. Now, not only today's session, many of you who have joined us previously, you should know that we have a series of Let's Learn Futures webinar series provided by Bursa Malaysia. Every Tuesday from 8:30 until 10 p.m. we are going to have respective topic. So the upcoming topic on 25th of July, we are going to have a spread trading strategies in the palm oil market. Followed by 8th of August, we are going to have a Malay topic, bagaimana swing trade dalam FCPO menggunakan COT reports. Then followed by 15th of August, it will be a Mandarin topic. So this topic is going to cover about Ichimoku itself. So for those who are interested in any of the session, we strongly advise you to scan this QR code and register accordingly. At least you'll get the notification. Once you register, then it will remind you. So let's say, for example, if you can, in the chat box, there's a link for you as well. You can click on the link to register. Now, not only Let's Learn Futures webinar series, we also have this Let's Learn Futures online workshop provided by Bursa Malaysia as well. Now, this online workshop is not suitable for any of the traders. This one is very suitable for those who are seriously getting yourself started in futures trading. Meaning, if you not yet get yourself started in futures trading, we strongly encourage you to go to this particular workshop. We have two workshops in one day. We divided into two sessions. Morning session will be 12:30 until 9:30 until 12:30, and afternoon session from 2 to 5 p.m. So this one we are going to cover step by step from A to Z for you to really understand and kickstart or place your first futures orders. So upcoming for Malay session, we just finished our English session last Saturday. Upcoming, we are going to have a Malay session on 13th of August, followed by 9th of September for Mandarin topic. So again, if you're interested, you can scan this QR code, or else in the chat box, there's a link. You can click on the link to register accordingly. Now, just for information, this online workshop, we restricted to, on the day itself, first 50 online attendees. So for those who really serious want important to get yourself started in futures trading, then only you register. Please do not take up other people's places or other people's seats. Now, before I start, as usual, I will need to introduce our speaker for today. The star for today is Mr. CY Saw Chun Yin. Now, CY is the excellent lead trainers and also hedging consultant. He's also a chartered market technician, chartered holder, CMD. He has more than 10 years of trading experience in local and international stocks and futures. He is very experienced in providing risk management consultation using derivative instruments for hedging itself. He's also a certified HRD corp trainer. His specialty is in trading system and strategies, trading psychologies, NLP, and also coaching. I believe you are very familiar with CY. So without further ado, please allow me to pass it over to you, CY.
Thank you very much. So good evening, everyone, and welcome to our session on mastering fundamental analysis for futures trading. And I hope all of you are doing well on your trading, as well as, today, I believe you are ready to learn some valuable insights. And, understanding the basics of fundamental analysis, in fact, is crucial for succeeding in the fast-paced world in the financial markets, because futures trading can be complex and unpredictable. So by using fundamental analysis, we can make sense of it all. Fundamental analysis is about looking at the essential factors that affect the value of whatever products that you're trading. So it is not just only about looking at charts and technical indicators. It's about understanding the bigger picture. So when we master fundamental analysis, we can see the reasons behind the price movements. We can also make some expectation about the market trends and make smarter decisions. So by studying these things like supply and demand, economic indicators, and important events around the country and the world, we can better understand how does the market will behave. So whether you're a beginner or an experienced trader, learning and using fundamental analysis can make a huge difference in your success in trading. While at the same time, it also helps you understand the demand as well as the supply, the market dynamics, the market structure. So by knowing this information, you can make better choices and also staying ahead of the game. So in the next hour, I will be covering several topics related to fundamental analysis that is related to futures trading. You will gain some insights and general idea on how to apply fundamental analysis in futures trading. So let's get started. Before we begin, I want to give a quick disclaimer. This presentation is for educational purposes only, and it's intended to give you a high level understanding of the trading concepts as well as how you do your analysis. Of course, this is not a substitute for a detailed study and the development of using effective trading methods. You will still need to put in some effort on your side to develop the necessary trading strategies that suit your individual needs. That being said, I hope today's session will help you widen your horizons as well as expand your knowledge of trading. So whether you are a beginner or experienced trader, there's always something new to learn. And I'm confident that you'll find value and insights that I will be sharing today. So as Ting has mentioned, introduced me earlier, my name is Chun Yin, but you can just call me CY. First and foremost, my professional background, in fact, lies in the field in finance and trading. And I have dedicated quite a significant portion of my career to understanding the complexity worlds of the financial markets, as well as exploring the dynamics of trading. However, my expertise extends a little bit beyond the realm of traditional finance. Besides that, I'm also particularly passionate about in a niche, which is what we call as the trading psychology. So in fact, the trading psychology aspect of trading is about understanding how our mind, biases, how our decision-making patterns influence our trading actions as well as behaviors that ultimately impact our trading performance. So over the years, I have worked with traders of all levels, from beginners to experienced professionals, helping them to develop the skills and mindsets that is needed to succeed in the market. So I'm passionate about sharing my knowledge and insights with others, and I'm here today to talk about mastering fundamental analysis for futures trading. So, of course, oftentimes I believe you heard about fundamental analysts or fund managers talks about fundamental analysis, right? And of course, very hard or even rarely that you will actually see technical analysis expert specialists to acknowledge as well as to talk about the importance of fundamental analysis. So with that being said, today I will share a little bit, about my view as a technical analyst on how important it is for looking at fundamental analysis. Without further ado, let's dive into today's content and explore about fundamental analysis. I will be diving into these 4 key topics that will help you becoming a better fundamental futures trader. The first topic, understanding the fundamental analysis. First, you will need to understand the purpose and importance of fundamental analysis. When you understand this, then you will appreciate why fundamental analysis is significant in helping you to make better decisions. And then later on, the topic number 2, you will learn and also notice the different types of futures market requires different types of fundamental analysis. So you will be looking at different set of information. By understanding the distinctions between the two types of futures market is actually very important for helping you selecting the right trading approach and managing your risk effectively. On topic 3, fundamental factors that drive the market. So here I will be sharing with you various fundamental factors that impact the market. And when you are able to be aware of them, it will actually give you some trading edge over the long run. So here I will share with you what are the fundamental factors that you can actually look at for different markets, specifically for FKLI and FCPO market. By keeping eye on these factors, you can actually anticipate the market movements as well as adjusting your trading strategies accordingly. And lastly, I am also going to share with you how you can actually incorporate fundamental analysis in your trading. And because fundamental analysis, it can actually enable you to make calculated risk as well as a trade that is based on fundamental factors and increase your chances of success. So are you ready to take your futures trading to the next level? If you are ready, you can type in yes in the chat box, and let's dive into it. Now, before we begin, let's take a quick poll. How many of you here, currently is using fundamental analysis in your trading? So if you're using fundamental analysis in your trading, you can type in yes in the chat box. If you are a completely technical trader, you don't look at fundamental factors at all, you just type in no in the chat box. Let me know, what would be, the portion of today's audience would actually is a combination of fundamental analysis as well as technical trader, or are you just only a purely technical trader? All right, I see there are mixtures of answers here. Majority of you here actually, I think it's technical trader. Some of you are actually half fundamental analysis. All right. Later on, I will be sharing with you the significance of understanding fundamental analysis in helping you make better trading decisions. Whether you are new to futures trading or have several years of experience, what I will be sharing you today may offer you some new insights and ideas to help you enhance the way how you actually approach the futures market and different perspective and looking into your trading strategies. So please stay tuned until the end of the session to get the most out of this topic. So the first topic, understanding fundamental analysis. First, you need to understand what is the purpose and importance of fundamental analysis. So in this topic, we will be discussing why fundamental analysis is important and how it actually relates to you in understanding the market, because it is important for you first to understand this, because many traders, especially technical traders, right, you may discount the value of fundamental analysis. So over the years, especially when your trading portfolio size grow larger, so this is when it is important for you to take fundamental analysis into consideration when making your trading decisions. While for those of you who just only use technical analysis, it's important to understand this as well, because when you understand today's topic, it can actually help you build a solid foundation and a groundwork in understanding better the reasons why price move, and also enhance your technical analysis as well, because fundamental analysis can be act as a confirmation as well as a tool for you to incorporate with your technical analysis. Now, before we go into it, I would like you to give you a try. There is no right or wrong answer here. You can type whatever answer that comes into your mind. What actually moves the market? So based on your understanding about the market, what are the things that actually moves the market? There's no right or wrong answer here, because all of us here are here to learn, because different traders, different investors look at different things in the market. So of course, if everyone are looking actually the same thing, then the market may not move at all, correct? It is very important that trend comes, it's when everybody has an expectation in a particular direction. So this is where trend actually develops. So I see majority of you looking at supply and demand. Okay, some look at big boy and geopolitical news. Okay, very well. So now, for those of you who use, especially using charts or technical traders, now I would like to share with you one thing is that over the years, where especially when you have been long in the market, and especially when your fund size grew a little bit larger and larger, right? You will notice that charts, in fact, they don't move the market at all. Okay, the conditions that actually moves the market. Okay, probably this is something new that is that you heard about. Some people say news moves the market, or whatever things that moves the market. But in fact, it is actually I would say conditions that actually moves the market. Now it means that it is not the chart themselves that cause the price to change in the financial markets. All right. Instead, it is the underlying conditions and factors in the market that actually drive price movement. So when you look at charts, what are the information that actually you can get? Okay, for those of you who are quite familiar with charting, the information that you can get from charts are just a few, right? Opening price, high, low, as well as closing price. Maybe you can get volume or even open interest out from it if you're trading futures. And based on the understanding of charts, in fact, charts are just only pictures. Charts are visual representation of the historical price and data and other technical indicators. So there are tools that are used by traders and investors to analyze market trends, patterns, and even potential future price movements. Charts helps trader to make informed decisions by identify potential entry and exit point, support and resistance level, and maybe other technical signals. However, it is important to note that the actions and decisions of market participants based on their interpretation of the chart patterns. Okay, that is actually what matters most. Okay, collectively, it is because of the interpretation from traders that influence market price movement. So when a significant number of traders as well as investors, when they react to a certain chart patterns or trading signals in a similar manner, so this is where it can create buying or selling pressures that may impact price movements. So generally speaking, market movements are actually driven by a combination of factors, including fundamental analysis, such as economic data, earnings, industry trends, and even market sentiments. So technical analysis, including interpretation of charts, and also this is where collectively what we want to look is actually what are the things that drives market price movements. Now, this is an example of a typical market structure schematics. So it looks complicated, but let me explain it to you in a simple way so that you can understand it easily. So first, we want to start from the far right-hand side. Then we move backwards to the left-hand side. So on the right-hand side is actually one thing that we actually see from the market, or one thing, the final thing that you will look at on your chart is in fact the market price movement, whether the price goes up or goes down, correct? This is because it is caused by the collective actions and decisions of market participants based on their interpretations that actually drives market price movement. So when a significant number of market participants make similar decisions, okay, if all market participants, right, they make a buy decision in the market, so this can actually lead to increased buying or even selling pressure, and this would in fact result in an upward or even downward price movements. So we move backward a little bit. What are the things that cause price movement is in fact the decisions. Okay, the market price in fact is determined by two major forces in the market, which is buy and sell decisions of market participants based on their own interpretation. Market participants make their decisions regarding buy, sell, or in fact do nothing. So these decisions are in fact influenced by how do they perceive things in the market, and then this is where before they make decision, they would of course interpret the market. So before traders and investors make decision about the market, they would analyze what happened in the market. So this is what we call as the conditions. If a condition, okay, if it is a condition that supports your bullish view, then you would make a buy decision, correct? And if it is a condition that supports your bearish view, then you make a sell decision. Very simple. So before the conditions are met, and this is where we will be gathering a lot of information about the market, which is what we call as the fundamental drivers or fundamental factors. So of course, for conditions to happen, you need changes in the various fundamental factors and a true interpretation of the market. When the market keeps changing, lots of information comes into the market every single day. So there are a multitude of factors that can influence the market price movement. So this includes fundamental factors. So later on, I will share a little bit about what are the fundamental factors that in fact influence your index futures as well as your commodities futures. So these fundamental factors, they, through analysis, it will actually affect the conditions in the market. It will affect your buy sell decision, and then this is where market changes in price. So if we look this whole thing overall, the relationship between fundamental drivers, the interpretation, conditions, decisions, and the market price movement, it actually highlights the dynamics as well as the nature of the financial markets, whereby what are the roles of these market participants play in shaping all of these movements. Now, so back to the very simple thing is that, what is fundamental analysis? Probably you know this already. Fundamental analysis is actually the study of factors, any factors that influence the price of the product that you trade. So for example, if you're trading the stock market, if you're looking at the financial services and banking industry, so there are a list of factors that actually affect that particular industry. If you trade FKLI stock index futures, there are a different list of factors that affect the index. Similarly, if you trade the crude palm oil futures, again, there are another different set of factors that affect the FCPO. So when you do fundamental analysis, it involves analyzing different types of information, both qualitative as well as quantitative information. So later on, I am going to share with you what are the things that you would actually want to look at in trading the Malaysia futures market. So the purpose of fundamental analysis, in fact, is to help us understand the market better, especially the current conditions of the market. When you evaluate the future price expectations, when you are able to identify trading opportunities and risks, and finally make a well-informed decision. So it provides you a way to analyze various factors that impacts the product that you're trading, and it allows you to make smarter investment choice and manage your risks effectively. And the most important thing that I want to highlight to you, regardless of what kind of analysis you do, whether you do fundamental analysis, technical analysis, or even sentiment analysis, ultimately it is for you to make an informed trading decisions. So overall, fundamental analysis, in fact, it helps us to gain a clearer understanding of the potential of the trend, as well as make an informed trading decision. So of course, when learning fundamental analysis, you need to understand the primary differences between fundamental analysis and technical analysis. Here, I am going to highlight a few important ones. So as you know, fundamental analysis, in fact, primarily is just looking about assessing the fundamental strengths as well as the weaknesses of the market, while technical analysis emphasize on short-term price movement. For those of you who like to use fundamental analysis, generally you will be actually looking at a broader and long-term view, but technical analysis looks at short-term and medium-term. So of course, on the data that you use would be very different for fundamental as well as technical. And ultimately, fundamental analysis, you would want to look at, you want to emphasize on the fundamental drivers. What are the things that drives the market? Whereas for technical analysis, if you're purely doing technical analysis, you may not look at news, you may not look at other things at all, because a pure technical trader, generally what they would actually look at it is just only price movements as well as charts. That's it. So if you use some form of, if you look at news, you interpret news, you look at research reports, somehow or other you would actually use a little bit or apply some form of fundamental analysis in your trading already. So different analysis provide different functions. So in fact, a lot of beginner traders, you may have a tendency to ask a very common question, which is whether fundamental analysis is better or technical analysis is better. So in fact, this question is like asking about your fingers, right? Which fingers is actually more important, because different fingers have different lengths, right? A question like, left hand is more important or right hand is important. So probably, I believe you got your own answer already. Both are important because both have different functions. Now, before we move on to the next topic, a quick question for you to think about is that, is fundamental analysis the same for trading different products or not? If you believe it is the same, you can use, the same fundamental analysis, looking at the same thing in trading different products. Then you can type in yes. If otherwise, you can actually just type in no. Okay, it's just a quick question for you to ponder about. I believe for those of you who are quite experience in the market already, you would have already gotten your answer. So I see majority of our audience here type in no. Okay, probably all of you are quite good in trading already, am I right? So which is why you actually do look at different things. Now, the second topic is that different types of futures market requires, yes, it requires different types of fundamental analysis. So you will be looking at different set of informations. So it's important that you are able to see the distinctions between, the two different types of futures market in Malaysia, okay? And it is crucial for you to select which market information is relevant and crucial for your analysis, because with the advances of technology, there are too much information in the market. So before you are able to digest the information or even understand the information, the new information just keeps coming up. So it's important for you to be able to filter out information and only taking in information that is relevant, information that are meaningful to the financial products that you're trading. So later on, I will share with you directly what in topic 3, what are the factors that actually affect the index futures and commodity futures. So as you may have already know that in Bursa Derivative Malaysia, these are the derivative products that you can trade in BMD. And the popular products that fall under these two categories are the commodity futures as well as the equity derivatives. So these two categories of products actually, they look at different fundamental aspects. And I'm going to share with you what makes both of them different from each other first. So you need to understand the product knowledge, what sets them apart between commodity derivatives as well as equity derivatives, so that you can see how you can take advantage of the trading opportunities available in them. For equity futures, we have two popular products, which is the FKLI and FM70. So both of them are following the underlying index. For index, the FTSE Bursa Malaysia KLCI, it actually derives the value from the top 30 market cap stocks. So it's highly correlated with the stock market. So when the stock market goes up, FKLI would definitely follow accordingly. And the index component for the top 30 market cap stocks actually comes from different industry. So the index itself, it's already considered quite well diversified, that represents the broad market. So when you trade the equity index futures, you actually don't need to focus on all the stock components in the index, because trading index futures is actually focusing on the general market sentiment and looking at macro factors, such as looking at the general economy, the country's fiscal and monetary policy. To make it simple, it looks at general bigger picture. So as compared to the stock market, it gives you easier analysis, as you don't have to look at individual stocks. You can see that the one of the advantages in trading equity futures is that you don't have to look at so many stocks. You just need to look at the general market by trading equity futures in the index futures. Besides that, index futures can be used for hedging. If you don't already know this yet, because equity futures or these index futures can be used for hedging. It allows investors to protect against the potential losses in their portfolio. So if you are afraid of your stock portfolio price to come down, you can actually use index futures to do your hedging by protecting yourself against market downturn, because hedging is about offsetting the potential losses in your portfolio if you're doing it correctly. So these are the uniqueness of index futures, especially for index futures. Now moving forward, because the equity index for FPMKLCI, it consists of the top 30 market capitalization companies. So the price movements for the individual components will actually influence the general index. Okay, I believe you know this very well. And generally speaking, the index is actually quite heavily influenced by the top 10. You can say that, the first top 15 of the top 10 market cap companies heavily influence the index movement, whereas the bottom 10 for the for within the top 30 companies, right, it has less influence because higher market cap stocks generally have contribute more weightage to the index calculation. Besides that, index depends on the company earnings. So if the general market participants perceive that the market or the economy is improving, then index will generally goes up. And on the other hand, if the market participants perceive that the economy is weakening, then the index definitely it will come down. So to make it simple, for index to go up, it's actually quite challenging because it has to drag 30 things to actually go up. So there may be a drag. However, for the index to come down, it is very sensitive here. It can come down all together very easily because we always follow the law of gravity, right? 30 things, you want to go up here, you have to drag 30 things up. It's very heavy and difficult, but if you want to come down, it's very easily. Now, understanding the participants in index futures are important because in index futures there are three key participants. Age's primary objective in using index futures is to protect their portfolio value, while for traders like you and I, or even arbitragers, their objective in the market is actually to grow their portfolio value through profiting from the market. They want to make money from the market by trading futures. So they may buy low and sell high, or they can sell high first and then buy it back low later. So these are the participants of index futures. Now the next category would be the commodity futures. So in Bursa Malaysia derivatives, we have FCPO, we have FEPO, as well as the gold futures. All of them are commodity futures. Now, analyzing commodity futures is different compared to equity index futures. Why? Because commodity is in fact a separate asset class. Commodities deals with the real physical products. It is raw material that will be used to produce another end products that all of us will be consuming and use in our daily lives. Commodities, it has low correlation to the stock market. So whatever happens in the stock market, it does not influence the commodity market that much. So for commodity futures, it is based on pure demand and supply dynamics. I believe a lot of you understand this. It is the demand and supply dynamics that influence the price movement for commodity futures. And unlike commodity companies, where you need to stock pick the best commodity or even plantation companies, you need to do stock filtering, you need to find the best companies that has a good management, good earnings, and etc. But when you trade commodity futures, you are actually directly trading the futures contract for the physical product itself. So it has nothing to do with stocks or even commodity companies. So you can see relatively comparing to trade stocks, trading commodity futures is actually very direct, and the fundamental analysis in fact is considered very straightforward, very direct, and considered quite easy. Now, to make it simple, commodity futures price movement is only affected by one thing only, which is the physical commodity itself. So let's say if you are going to trade FCPO, you just need to look at the palm oil related information. If you are trading gold futures, you just need to look at factors that affect gold will do. So because ultimately commodity futures depends on the demand and supply of the physical commodity itself. So it's unlike trading the index futures, FKLI, where FKLI price is actually affected by the top 30 companies. Commodity futures is relatively very straightforward. Now, speaking of market participants for commodity futures market, same thing, there are three key market participants. Hedgers are those who produce commodities or even they consume and buy commodity. Their primary objective in using the commodity futures is to protect their inventory value, their purchasing cost, or even their selling price for the physical commodity. So let me give you a quick example here is that, for example, if a hedger is a buyer of commodity, so they are afraid of rising price because rising price would actually increase their cost. So they would use futures to lock in their cost. And if a hedger is a seller of commodity, they are afraid of falling price because falling price means you have to sell at lower price and then you make lesser profit. So they will use futures to lock in their selling price as well. So you can see, hedgers' primary concern is actually to protect their inventory value and to lock in their profit. While for traders and arbitrageurs, their objective in the market is to make money in the market, to profit from the market, as well as grow their portfolio value. Traders and arbitrageurs, they can trade both directions in the market, whether is it price going up trend or price coming down trend. They can trade both directions. So now that you already understand the mechanics behind the fundamental difference between index futures and commodity futures. Now let's directly go into the fundamental factors that drive the futures market. Different markets have different factors that affect them. So in this topic, I'm going to share with you what are the factors that affect index futures and factors that affect commodity futures. So pay attention to this. Let's get started with the index futures first. The fundamental factors that can drive index futures includes all of these things, okay? The first one would be macroeconomic indicators. So macroeconomic indicators such as the GDP growth, inflation rates, interest rates, employment figures, these things can significantly impact index futures. So to make it simple is that positive economic data, they would indicate a strong economy, which may lead to an increase in demand for stocks or increase in company earnings. So this is where it may be causing the index futures to go up higher. And conversely, a negative outlook from the economic indicators may cause a decline in the index futures. The second factors would be on corporate earnings because you are trading index futures, right? And index futures are coming from the top 30 market cap stocks. All of them are actually are companies. So the earning reports and the financial performance of the companies already included in the index, which can have a significant impact in the index futures. So again, it is quite related to the first factor, which is the macroeconomic indicators. Strong earnings results and positive outlooks from companies within the index can actually drive the index futures higher, while weak earnings or negative outlook can actually drive the index lower. Third factor would be on the monetary policy and central bank actions. So the monetary policy decisions, including changes in interest rates and whether there is a monetary stimulus by the central bank or not. So these are the things can also affect the changes in index futures price. So of course, when we mention about monetary policy, we would generally prefer lower interest rate or a monetary policy that are accommodative towards the market, that is kind towards the market. Okay, this may actually provide a boost to stock markets, and then it drives your futures index futures higher. Whereas for policies that is restrictive, this will tighten the market, and it would drive the market price comes down. And one of the factor which I believe earlier on in the chat box, somebody mentioned about geopolitical events. That's right. So geopolitical events such as elections, political instability, trade disputes, or even geopolitical tensions. So in short, we can call it this as the geo factor. These factors can create volatility as well as impact index futures. So to make it simple, is that positive resolutions in terms of politics or stable geopolitical conditions, they can support the market confidence, and they can drive future price higher. While negative developments or negative geopolitical events, they can lead to market uncertainty. So this is where market is uncertain, the market will generally have downward pressures, whether is it on index futures or even in the stock market. And the final two common factors for index futures would be the industry and sector trends. So of course, the performance and the outlook for specific industries or sectors can influence your index futures. Positive developments or strong growth in a particular industry may drive futures index higher, especially for the financial services industry, because the banking sector or the financial sectors actually has quite a heavy weightage in our FEM KLCI index. And lastly, investor sentiment, because when it comes to the general stock market, right, it deals with human, it deals with investors. So investor sentiment, including how does investors see or perceive the market, whether is it optimistic or pessimistic about the market. So these can have a significant impact on index futures. So positive sentiment or high investor confidence can drive the market price higher, while negative sentiment or fear in the market can lead to declines. So here you can see it is important for you to take note that the impact of these fundamental factors can be different depending on the specific index and the market conditions. So as traders and investors, we often analyze these factors in conjunction with technical analysis and the market trends to make our trading decisions in, especially if you're trading the index futures, FKLI or FM70. So now I've already gone through the factors that affect index futures. Now, let's go through a little while on the commodity futures, especially for FCPO and FEPO market. So these are the fundamental factors that can drive commodity futures. And this includes very important one. When you trade commodity futures, supply and demand dynamic is actually the number one factors that impact commodity futures, whether you like it or not, because supply and demand, it has a significant impact on commodity futures prices. So factors such as, there are many factors that affect supply and demand, like weather conditions, natural disasters, production levels of the commodity, the inventories or the stock level, or even global demand can influence the supply and demand balance of that particular commodity. So for example, in an adverse weather condition, it can affect your harvesting rate. So this may reduce your supply and higher prices of your agriculture commodities. Another factor that is very closely related to supply and demand is your inventory and your storage level. So inventory levels and storage capacity of commodities can influence your futures price. Higher supplies, or when you have ample of storage capacity, it can actually lead to downward pressure on price, because it indicates sufficient supply. There are a lot of supply that has not been sold out yet. So this is when there is high supply in the market, so it will have a downward pressure on prices. Conversely, when you have a low inventory, or when the data shows that there's low inventory or limited storage capacity, and these factors will lead to high prices due to concerns of scarcity or potential disruption in the supply and demand. Seasonal factors also impact your supply and demand dynamics. And the second factor that would influence your commodity futures would be your government policies as well as regulations. Government policies and regulations can impact commodity prices, such as import and export restriction, subsidies, taxes, tariffs, and regulations related to environmental sustainability or even safety standards. So all of these policies can have direct influence towards the supply and demand of the commodities that you're trading. Now, the third factor for commodity futures would be the economic growth and industry demand. Of course, this does not weigh so much on your supply and demand. However, it also more or less it's one of the factors that can cause the changes in supply and demand. So commodity futures, it can be influenced by overall economic growth and industry demand. For a strong economy growth, typically would lead to increase in demand that is used for the specific commodities, especially if there's a strong demand in economic growth, you may need more crude palm oil in terms of producing your daily lives items, okay, that we commonly use in terms of manufacturing and so on. So such factors like economic growth, again, it will relate to the GDP growth, industrial production, and all of these things can impact your commodity futures prices. And lastly, number 4 would be your geopolitical events and geographical factors. This includes geopolitical events, political instability or trade disruptions, sanctions, and even conflicts in major commodity producing countries can impact your commodity futures price very directly. Any disruption in the production or transportation of commodities due to geopolitical factors can affect your supply and demand, and ultimately the price in the market. So therefore, it is important for us to take note that the impact and the relevance of these fundamental factors can in fact vary depending on the specific commodity and market conditions. So as traders and investors, we often analyze these factors alongside with technical analysis and market trends to make an informed decisions in commodity futures trading. Now, before we go into the last topic, which is another quick question for you to think about, is the trading rules for fundamental analysis for index futures and commodities futures same or not? Okay, I believe if your answer for the earlier question, right, if is no, then most likely your answer for this question would be no as well, because different futures market, yes, it looks at different fundamental factors, and therefore the strategies as well as the trading rules that you trade would definitely would be different. Of course, some of these index futures and commodity futures, they may have some of the factors that is overlapping, but market has too much information, right? We want to look at information that is relevant and meaningful towards your analysis. Now let's go through what are the basic trading strategy using fundamental analysis. So here comes the last topic, and now that you have already know what are the fundamental factors that affect both index and commodity futures. It is now time for us to learn about this basic trading strategy using fundamental analysis. By understanding how you can incorporate fundamental analysis in your trading, it would enable you to make calculated trades based on fundamental factors and increase your chances in your entry as well as your exit point. Now let's go through on the first thing first, which is the index futures. Now the basic trading strategy is this. As a rule of thumb, when the market participants see the market or expect the market to be positive or even optimistic, then they will actually enter the market, causing the price to increase. On the other hand, when market participants see or expect the market to be negative or pessimistic about it, then they would actually, begin to exit the market or stay away from the market. This would generally cause the price to come down. So irregardless of what data that you are looking at, okay, whatever fundamental data that you're looking at, only two rule of thumb you want to know is that whether this data is positive, whether this data is negative. Is it something that would lead the general market to enter the general market participants to enter the market or exit the market? So when you understand this, it gives you more or less a guidance or confidence to make a trade decision or entering into a particular direction and hold on to the trend. Now here, I'm going to highlight some of a few factors that would lead the market price increase for index futures. So here I'm going to list out the positive ones. So for the negative ones, if you want to know, you can just take the opposite of this positive will do. So the first one would be the GDP growth. So when you expect GDP growth is better than expected, increase in GDP indicates a growing economy, and typically it reflects positive economic activity across different sectors. Low unemployment rate. A low unemployment rate, in fact, it suggests that a strong job market and increase in consumer spending power. Low inflation rate would indicate a stable price as well as increased purchasing power for consumers. And of course, when speaking of interest rates, oftentimes people would say low interest rate is better. Some people would say high interest rate is better. But in fact, it depends on the market cycle. A healthy interest rate can actually be good for facilitating the economic growth. Strong industrial production. So when you see data that for example, manufacturing PMI data, it shows that there is an increase in industrial production. It reflects that higher manufacturing productivity, and it is actually considered as a positive sign for economic growth. Rising consumer confidence. When consumers are confident about the economy, they tend to spend more, which in fact stimulates economic growth. Increase in retail sales also indicates rising consumer confidence. When retail sales are rising, what it indicates is that consumers are generally spending more. So it's a positive sign for economic activity. And there are many other fundamental factors or even economic data that would support the general economy to actually grow. So if you want to know what would cause the general index price to come down, all you need to do is actually to find the opposite for these factors in order to understand what are the negative things that can cause index futures price to come down. Okay, so always remember when you look at index futures, only two rules, okay, whether is it positive and optimistic and whether it is negative and pessimistic. Now, for commodity futures, the basic trading rules is this. As a rule of thumb, when the market participant see or expects the commodity product. Okay, for example, if you see FCPO is going to have a stronger demand, or a combination with a lower supply in the future, then as an overall impact, when the net buyers are stronger than the net sellers, meaning the consumer buyers are stronger than the producers. So what it means is that the commercials are willing to pay higher price for the commodity because they really want the physical product for their business operation, and therefore this will cause price to increase. And on the other hand, when the market participant sees or even expects the commodity product to have a weaker demand or higher supply or combination of both of these, then as an overall impact, the sellers are stronger than the buyers, meaning the producers are the sellers, right? They are stronger than the commercials. Producers are willing to sell at lower price for their production, okay? Because producers, all they want is that after they're harvesting, they are willing to sell lower price because what they want is they want money and they do not want to hold their commodity stock or inventory. So which is why they are willing to sell, and just to get rid all of their stocks. So this would cause the price to generally comes down. Okay, so these are the general principle when you want to analyze fundamental factors for commodity futures. Here are the list of factors that support commodity futures price to go up. So if you want to find commodity price to go down, you just take the opposite of this. Okay, so of course the first one, increase in demand, rising demand for particular commodity, for example FCPO, it can actually cause FCPO price to go up. Another factors like population growth or changes in consumer preferences can also contribute to a stronger and increased demand. Next, lower tariff and tax. When tariffs and tax on imported commodities are reduced, so it can make those commodities looks more affordable for consumers. So this can actually increase the demand for the foreign countries to actually buy FCPO from us. So this can drive commodity futures price up. Similarly, higher export. Increase in export for your commodity means people want to buy from you, right? So which means there is actually a strong demand from foreign markets. So for example, for our FCPO market, when there is a strong demand from foreign markets, especially from China as well as India, it can actually create competition for the available supply. So this is why it will push prices upwards. So as you may have already know that in Malaysia we are considered as the world's second largest CPO producer, and the main buyers are from India as well as China. So you want to have a close look up on these two countries' demand for the crude palm oil. So when the demand, when they have high demand, means that indirectly your data you can see actually is actually from your higher export activities there. Lower production, of course, this would actually decrease production of commodity, so it means a lower supply. So lower supply, it will drive commodity prices up because buyers are generally willing to pay more in order to secure the limited available quantity. Same thing, lower storage and lower inventory, it means commodity supply are lower. So this indicates potential shortage in the market. So investors and traders are in fact anticipate this scarcity to happen. So they will actually bid the price up for the futures. They are willing to pay higher price in order to get the physical commodities. Okay. Government policies and subsidies that support the demand for the commodities. For example, if let's say the government supports or stimulates demand for a specific commodities, for example, policies that is promoting biodiesel from crude palm oil. So this can actually in fact increase the demand for crude palm oil, and therefore it will drive futures price up. Increase in consumption can also increase demand of commodities. And okay, one last thing that I would like to highlight is actually war and natural disasters. So of course, for those of you who are still very new in the commodity trading market, is that we have very recent news, and I believe all of you may have already know is that recent events such as war, the Russian-Ukraine war in the year 2022, this leads to many commodity prices to go up, especially the agriculture commodities and the energy commodities. When war happens, agriculture commodities, they just continuously limit up for several days, especially for soybean, corn, as well as wheat. So here you can see whenever there is a war or disaster happens, ultimately it may gives the market impression is that there would be a disruption in commodity supplies. So this will lead to buyers would want to buy commodity up first in order to store commodity so that it does not affect their business operation. Of course, there are many more other fundamental factors that can affect commodity prices to go up. If you want to know what will cause commodity prices to come down, all you need to do is actually just to find the flip side of these factors to know what is the opposite side of this impact. Okay, so hopefully you get a general brief idea of how the factors that affect your commodity futures. Now, before we end, I would like to highlight this thing again, the importance of fundamental analysis. Technical analysis and fundamental analysis are, in fact, yes, two different approaches to analyze the financial markets and making an investment decision. Of course, you need to acknowledge and recognize the importance of fundamental analysis because it allows traders and investors to gain a more comprehensive understanding about the market. It also gives you a valuable insight about the overall economic environment. What is the industry trend? What is the overall market is actually doing? Besides that, you are also able to look at identify what are the potential catalysts that can actually drive the significant price movement. What are the things that will actually drive the index futures to go up higher or even lower? What are the potential catalysts that can make or drive FCPO price to sustain its uptrend or to sustain its downtrend? Besides that, as you know, fundamental analysis, it focuses on the longer term perspective. Unlike technical analysis, concern is about the short-term price movements. Fundamental analysis looks at a long-term picture, whether does the trend can persist for an extended period of time. And of course, lastly, for those of you who are technical traders or you consider as you may incorporate fundamental analysis. Fundamental analysis, yes, you can use this as a form of confirmation or validation for your technical analysis signals. When your technical indicators are aligned, okay, with the relevant fundamental factors, it can actually gives you a stronger conviction or a stronger confidence in a particular trade in terms of, for example, if you believe the trend is going to persist for an extended period of time, supported by good fundamental factors. So this is where you are able to hold a longer position, hold an extended longer period of time, so that you are able to capture a bigger trend in your trading and you know, take a good investment opportunity out of it. All right. So these are the good things about fundamental analysis of how it can help you to be a better fundamental trader. It can also help you to be a better technical trader in terms of entering and exiting the market. So here's it. The four key takeaway points is that fundamental factors and conditions, in fact, they drive the market price movement. So it is not just only charts that drive market price, because ultimately the fundamental things are actually the things that support the price, whether the price is going to go up even higher or even lower. There are differences in the structure for index futures and commodity futures. So you need to understand what are the differences that distinguish index futures and commodity futures, the differences between FKLI and FCPO. Fundamental factors, of course, that drive futures market would be very different. For index futures, primarily it is based on growth, earnings, as well as the market sentiment. But for commodity futures, very simple and straightforward, demand and supply. And I've also shared with you the basic trading strategy using fundamental analysis. Index futures, very simple rule, whether is it positive and optimistic or pessimistic or negative towards the market. And for commodity futures, if there is strong demand, price will go up. If there is a stronger supply or highest increase in supply, prices would generally come down. So that's it for my sharing for today, and I hope that you learn about what are the fundamental factors that specifically that you can use in trading different markets. So I pass this back to Ting Ting.
Thank you very much for CY for his very informative presentation. I believe by now you should understand very well about this, what we call fundamental analysis, or you become the master of this fundamental analysis. Now, before I continue, if you have any question, you can start to type in your question right now. What you need to do is you need to click on the Q&A box, then type in your question, and please send it to all co-hosts. While waiting for your question, can you please spare, let's say, for example, 30 seconds to a minute, very short of a time, to provide us with your feedback, because your feedback is very important for us throughout the whole session. At least we know what we need to do for the upcoming session, or let's say, for example, what kind of topics that you would like to learn. You can also provide us in the feedback. Now, there are two ways for you to provide us with your feedback. Either you can scan this QR code, you take your mobile phone, you can scan this QR code, or else in the chat box, I can see that our admin already provide the link. You can click on the link and provide us with your feedback. Now, you can write in any of the languages, English, Malay, or even Mandarin, to provide us with your feedback. Just a very quick one, 30 seconds to a minute. So I repeat, two ways. You can scan this QR code, or else in the chat box, there's a link. Can you please provide us with your feedback before we continue with the Q&A session? Just a quick 30 seconds to a minute, you should be able to finish it. Last 30 seconds. Okay, for those who already submitted your feedback, We really appreciate your feedback because your feedback is very important for us to value what we need to do for the upcoming session. Now, we are going to start with our Q&A session. For those who not yet finished with your feedback, you can continue to provide us with your feedback. You can even provide us at the end of the session. You can just copy the link and provide us with the feedback at the end of the session. Now, right now, we are going to start with the Q&A. The first question for CY, how do you give weightage to incorporating correlation into your trading strategies?
Okay, that's a good question, and actually looking at a very long-term perspective. So when we look at correlation and co-integration, in fact, these two things is actually looking at from a quantitative or statistical perspective. Correct. So of course, it includes looking at a very long-term period of data. So when we look at correlation or looking at whether the co-integration between the market, we would actually looking at the long-term perspective. So of course, sometimes when it comes to trading, right, for example, trading the FKLI or Malaysia market. Let me give an example here. When we look at Malaysia index, sometimes we look at the US index, whether US index affect Malaysia index or whether Malaysia index affect US index. So this is why we want to find relationship out from it. Of course, we can run a statistical analysis or time series analysis to look at, what is the correlation between that. So in the long term, for example, it might say that, yes, US market may affect Malaysia market. However, in the short run period time, right, for example, day to day or even week to week changes, you may see that it is considered quite a little bit random. So, of course, when we want to look at fundamental analysis, quantitative analysis, one of the characteristics for that is actually we are looking at the long-term perspective rather than short-term perspective. So it depends on your trading strategy. If your approach is a long-term approach of trading strategy, then yes, the weightage in putting into this correlation or co-integration factor would be a little bit higher. However, do note that again back to the market structure, the long-term trend is actually being it's being developed because of those medium trend, and medium trend it's actually being developed from those short-term trend. So of course, as a trader and investor, we want to focus on ultimately the direction of the market. So when the direction slowly changes, it makes better sense for us to actually follow the direction, even though our opinion towards the long run may be correct, but in terms of medium term or even in short term, we may be a little bit wrong. So when it comes to trading strategy, as a trader, it's very important to take note that ultimately, what is your objective in the market? Are you a long-term trader that focuses on long-term approach, or are you a short-term trader that focus on the short-term price fluctuation in the market?
Okay, now the second question is how do we get the dates for the various economy data release? So I assume that this question she's going to ask for local, because since majority of the fundamental analysis that you covered is for local, maybe you can share in terms of local and also international. Okay,
for the there is one website you can find, I think it's tradingeconomics.com. There are a lot of free economic data that you can get. Whereas the date for economic data release, the most advanced ones is those developed countries. They do really have, they set a date when to release the economic data. But for Malaysia, it might be a little bit lagging. So for tradingeconomics.com, it's actually a good source for you to get various economic data from there.
Okay, since you are mentioning about there's a delay in terms of the economic data, right? This question might be relevant. He's asking, wouldn't fundamental analysis be delayed compared to technical analysis when the charts may shows pre-movement signs earlier before news are announced, or sometimes when data is released, it is too late to react, as sometimes it will gap up or gap down. What is your view in terms of this?
Okay, this is definitely from a perspective of who involved in the market, am I right? So of course, yes, there would be a delay in fundamental data because before fundamental data are being published, which is why it is important, you know, when it comes to trading uh, index futures and commodity futures, we need to really understand who the market participants are, because oftentimes trader will just trade the market without knowing who are the market participants, right? So in fact, those market participants who make an early movements, they are considered as smart money, or those who are considered as institutions. So they have a lot of resources in terms of their research and analysis. So this is where they are able to, you know, number one, get data and information pretty easily. Number two is that they have different objectives compared to us as retail traders. So which is why for those institutions or for those the smart monies, they might take a position in the market in terms of whether is it hedging or even speculating. Uh, they have their own objective. But as retail traders, all we need to do is, you know, just to stick on to your own trading approach. Make sure that you have your own trading strategy, your own trading system, and most importantly, you got to be able to manage your own risks. For example, you know, managing your position sizing, have a good cut loss, so that, you know, if you are correct in a particular market, congratulations, you make money out of it. And if your opinion towards the market is incorrect, so at least you are able to, you know, get out from the market, and then have a reader in case your opinion is incorrect.
Okay, another question very relevant is, what is the usual strategies when anticipating data release? Do we wait for the data announcement first, then only take position?
Okay, what would be the usual strategy? Of course, there are two kinds of back to the very foundation in you know, a common logic is that high risk, high return, a low risk, low return, correct? So before data release, definitely there would be uncertainty and high risk. So of course, if you take position before data release, you are taking a high risk, and similarly, your return would be higher. However, when you if your strategy is actually waiting until the data is being released. So this is where you would, the market, you are quite certain about the data already, correct? So you have lower risk, and similarly, your return can be lower as well. So that, which is why there is this two different timing of entering the market, whether is it before data release or after the data release. Before data release, a high risk with high return. After data release is certain, there is certainty already, so it will be low risk, low return.
Okay, another question is quite relevant as well. Can I purely trade using fundamental analysis?
Okay. Trading futures purely using fundamental analysis. I wouldn't suggest or agree with that, because as a trader, ultimately, it would be good to incorporate different types of analysis when it comes to trading, because ultimately when you do trading long enough, you can see, the word trading, right? It never mentioned about analysis. So trading includes different types of analysis. It is not just only fundamental analysis or technical analysis. Ultimately, it's about being able to enter the market as well as exit the market with according to your own trading rule with discipline. So it is important for you to be able to set up your trading rule depending on whatever kind of analysis. So if you go on fundamental analysis, you have trading rules of fundamental analysis. And of course, you another thing that you need to look out on is, you need to incorporate money management as well as managing your risk in terms of, using fundamental analysis or using technical analysis. So ultimately, trading, it's I would say it's a holistic view towards looking at the market, because as you know, fundamental analysis, it's part of many types of analysis. Same thing goes with technical analysis. It's one portion of among many analysis. So when it comes to trading, it is important to look at the whole competency that you need as a trader, rather than just focus on analysis itself.
Okay, now because of time limitation, we are not able to take all the questions. We can only select those very relevant questions to today's topic to ask CY. So thanks for your question and thanks for CY for all your answers. Now let's continue and wrap the session for today. If you know you have submit your feedback form, we appreciate you to scan this QR code and provide us with your feedback. Now, not only today's session, upcoming every Tuesday for different languages, we are going to have different speakers to cover different topics. So you can, based on this particular table, to search for the topics that you are interested in and scan the QR code, or else in the chat box, our admin already provide the link. You can click on the link to register accordingly. At least when you register, there's a reminder is going to send to you. So you lock your time, lock your date, you can attend the topics accordingly. So you can see upcoming, like 25th of July, we're going to have a spread trading strategies. Then subsequently followed by 8 August, we are going to have a Malay topic, and 15 August, we are going to have a Mandarin topics. So any topics that you are interested, please scan this QR code, or you can click on the link in the chat box, or else you can take a photo and send it to your friends so that your friends can be benefited as well. Now, once you click on the link, you're going to see that this is our events calendar. Just select on the Tuesday itself. So you look through the Tuesday, select the events that you are interested to attend, then you click on the events and register accordingly. Not only the Let's Learn Futures webinar series, we are going to have the Let's Learn Futures online workshop as well. So this series of online workshop is provided by Bursa Malaysia. For those who are beginners, you get yourself started in futures trading, I strongly urge you to participate in this all online workshop. So we have online workshop 1 and online workshop 2. So you are encouraged to register for online workshop 1, attend the online workshop 1, then only you attend the online workshop 2. So we're going to cover from A to Z for you to really understand and get yourself started in futures trading. This online workshop we only allocate for the first 50 online attendees on the day itself. So we open for registration up to 150 participants, but on the day itself, we only allocate first 50 online attendees. Now, this is the upcoming for the online workshop. You can see that the upcoming session will be in Malay. For the previous Saturday, we already conducted our English session. Upcoming will be the Malay session on the 13th of August. So you can scan and register accordingly. And when you approach this events calendar, please click on Saturday itself. Now, this is the simulation platform provided by Bursa Malaysia Derivative. We call it as Derivative Trading Simulator, DTS. So what you need to do is, this is the platform for you to test it out, your trading strategies, or test it out how do you trade your futures. You can access to www.bursamarketplace.com/mkt/DTS. You can register accordingly, and you are allowed to use the platform for upcoming 1 month itself. Now, the last part is this Bursa Academy, which is a comprehensive one-stop e-learning platform. You can access and get all the learning information, all the learning materials via this platform itself. So what you need to do is you can scan this QR code, or else you can access to bursaacademy.bursamarketplace.com. So this comes to the end of our session for today. Really thanks for your participation, and we believe that today's session itself really helps you in fundamental analysis. So thanks to CY, and thanks to all our participants. Have a good night, and thank you.